Hey everyone, welcome back to Corporate Decoder, the place where we tell you what's really going on behind the corporate curtain. And today we're diving into some serious auditor drama at B. Riley Financial. So what's the big news from this filing? It looks like B. Riley Financial is switching its main accountants, saying goodbye to Markham L and bringing in BDO USA PC. But it's not as simple as just changing accountants. There's a whole backstory here involving some important internal control issues that led to this move, and interestingly, some past relationships with the new accounting firm that needed clearing up. Let's break it all down. First off, who is B. Riley Financial? They're a well-known financial services company involved in investment banking, research, and wealth management. They've got various types of stocks and bonds out there, which is why they need to report to us SEC folks so regularly. Now let's get to the heart of the matter. The company's audit committee decided to part ways with Markham LLP. This happened on September 8, 2025, and it was set to kick in after Markham finished up their audit for the year ending December 31, 2024. Normally, when a company changes its auditor, people pay close attention. Sometimes it's because there were disagreements, or maybe the company just wanted a fresh perspective. According to the filing, there weren't any big arguments about accounting rules or how they presented their financial information. That's a bit unusual when auditors are changed, but it's what they're saying here. However, and this is a big however, there were some significant problems with the company's internal controls. Think of internal controls as the company's own set of rules and checks to make sure everything is accurate and secure, especially when it comes to financial reporting. The filing lists a bunch of these issues, and they're quite serious. We're talking about problems with controlling who has access to computer systems, how changes are managed in those systems, and how they handle IT operations. There were also several instances where they couldn't rely on reports from outside companies that handle some of their IT processes for things like customer sales and billing. This means they couldn't be sure the information coming from these third parties was accurate. When you can't rely on your systems or your partners' systems, that's a red flag for financial reporting accuracy. They found similar IT control weaknesses in other subsidiaries, Lingo Management and Tiger US Holdings. This suggests that it wasn't just an isolated incident, but a broader issue affecting multiple parts of the business. Another major area of concern was how management reviewed investment valuations, especially for those tricky level 3 investments. These are investments where the pricing isn't readily available from market sources, so the company has to use their own models. If the review of these valuations isn't precise enough, it could lead to misstated financial results. They also found issues with making sure related party transactions were properly identified and disclosed. Related party transactions are deals between the company and its own management or other entities that it's connected to. These need super careful disclosure because they can sometimes be used to influence financial results in ways that aren't in the best interest of all shareholders. Then there were problems with reviewing the company's income tax provision. Getting the tax calculations right is crucial, and if the review process isn't strong enough, it can lead to errors in how much tax the company reports. Goodwill, which represents the excess of the purchase price of an acquisition over the fair value of its identifiable net assets, was another area with control weaknesses. This means management wasn't doing a thorough enough job of checking if the value of goodwill on their books was still appropriate, which could hide problems with past acquisitions. They even found issues with the basic process of reviewing and approving journal entries, which are the fundamental records of financial transactions. There was a lack of separation of duties, meaning people could potentially create and approve their own entries, and they weren't always keeping good records of these reviews. More IT control weaknesses popped up at Baby Stores Inc. It seems like IT controls were a recurring headache. And yet another issue with third-party service organizations for B. Riley. Retail Solutions LLC. This paints a picture of a company that struggled to ensure the reliability of its financial data, especially when relying on external systems and partners. All these issues were apparently discussed between the audit committee and Markham. Then B. Riley provided Markham with a copy of these disclosures and asked them to confirm if they agreed. Markham did, and their letter is filed as an exhibit, showing they stand by what B. Riley is saying about the past. Now, about their accountants BDO USA, PC, they were appointed on that same September date, with the understanding that BDO would do their own checks before fully taking on the role. Here's where it gets interesting. BDO actually told B. Riley that they couldn't be completely independent initially because BDO's own member firms had provided some non-audit services to B. Riley's affiliates. Things like payroll, secretarial services, and other financial help. You see, auditors need to be completely neutral in their audits. If they provide other services to a company, it can create a conflict of interest. The good news is all those potentially problematic services from BDO's related firms stopped back in April. This was done before BDO was officially appointed as the auditor. BDO and the audit committee both concluded that these past services wouldn't actually cloud BDO's judgment in auditing B. Riley's main financials. They explained this by saying the services were done for only a few smaller foreign subsidiaries. They didn't significantly impact the overall B. Riley financial picture, and the fees were really small in comparison, both in amount and in how important they were. And to make sure everything is squeaky clean, the team at BDO that will be doing the audit will have absolutely no contact with the BDO people who did those other services for B. Riley. The individuals involved in those past services won't be on the audit team at all. This is all to satisfy what's called objectivity and impartiality, making sure the audit is fair and unbiased. Also, B. Riley clarified that they haven't consulted BDO on any specific accounting questions before this appointment, ensuring that BDO isn't being brought in to help solve problems they might later have to audit. So, what's the story here? B. Riley Financial is facing significant internal control weaknesses, particularly in IT and in how they review financial data and related party transactions. These issues are serious enough that they've led to a change in their auditor. The fact that they've had to lay out so many material weaknesses, especially in ITGCs across multiple subsidiaries, suggests there are systemic problems that need fixing. The switch to BDO, while cleared by the audit committee, comes with a history of BDO's own affiliates providing services to B. Riley. While they've taken steps to ensure BDO's independence for the audit, it's something to keep an eye on. A company with so many internal control issues often means management has been stretched thin or has some blind spots, and getting the right independent auditors is crucial for rebuilding trust and ensuring accurate financial reporting going forward. The company direction here is clearly focused on fixing these control issues. The risks are that these weaknesses could lead to material errors in financial statements, or even fraud if not corrected effectively. The opportunity is that by bringing in a new auditor and addressing these problems head on, they can strengthen their financial reporting and governance, which is essential for investor confidence. My take is that while the change in auditors and the disclosure of these weaknesses are a positive step towards transparency, the sheer number and nature of the control issues are a significant concern. Investors need to trust that B. Riley is not just patching up problems, but fundamentally improving its internal systems and oversight. The past relationship with BDO also warrants a bit of extra scrutiny to ensure that independence is truly maintained throughout the audit process. Alright, that's our breakdown of B. Riley Financial's auditor change and the underlying control issues. What's your take on these numbers and what they signal for the company's future? Do you think bringing in BDO will help them clean up these control problems? Let me know in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.